Thank you for having us here. Are you okay? Yeah. Oh, sorry. There we go. Perfect. I love that other presentation so much. I wanted to also present. So Sabio is in the high growth market of advertising streaming and mobile advertising, TV and mobile advertising. I'll explain what that is in a little bit, but let's get to the numbers first, because that's what everyone's interested in. High growth, profitable company, revenue of up 84% in 2021, that's all 100% organic growth, to over $24 million. We're off to a strong 2022. First half, another 88%, 99% of that organic growth at $12.8 million. Trailing 12 months at the end of Q2 22, $30.2 million, up 96%, year-over-year. We're positioned in streaming. For those of you who are not familiar with streaming apps, you're familiar with apps on your phone, right? So the apps on your phone have advertisements on them. That's how Sabio started. Sabio means wiser experience in Spanish. We initially started putting ads on apps on your phone. From there, we expanded into putting ads on your TV. And so if you have a smart TV, you have an LG, a Vizio, a Samsung, you're used to, and you might have cable, and some of you are obviously cutting the cord as a lot, and I'll talk about, a lot of you are. What you're doing is you're using your apps on your TV. And there's an app, once you have an app on your TV, a smart TV, it connects to the internet. And that content is getting better every year. And we'll explain what we do there. We built a world-class team. My experience, here with me today, is Sajid Premji, our CFO, and AD McDermott. She's our head of investor relations. My background, I spent 3 years at Fox, 6 years at NBC, 3 years at AT&T, 3 years at Opera, the browser company, before I started Sabio. And so, what I did along the way is meet some great people, and I brought them on this journey together. So we have a really good, experienced team. We have an amazing board. Paula Madison was a GE officer. Carl Farrell was a chief revenue officer for SAS. Jennifer Cavalcanto, up until a year ago, was the CFO of the Golden State Warriors NBA basketball team. And Moaz Kiraj is managing director of Focal Point Ventures. So not only do we have a great team, we have an excellent board. We have about 120 strong across the world. Our offices, biggest offices in Los Angeles and now New York. We have offices in Hyderabad and Surat. So 120 includes engineering, data science, execution across the way. So what do we do? So there's traditional TV, right? For those of you who are still paying your cable bills, if you called your cable company up today and said, hey, listen, I'm not paying for this cable anymore, the first thing they're going to do is give it to you free. They're going to say, listen, don't worry about it. We will give it to you free. Just keep it. We want you to keep it. Just hold on to it, but we'll give it to you free. Now, the value of that is zero, right? Whenever you get something for free, it's zero. Their challenge is a lot of people are not even keeping it for free. If you talk to anyone under the age of 24, they're on YouTube, they're on apps, they don't even know what NBC, ABC, or some of the channels here in Canada are. They don't care about that. Here, they care about, obviously, hockey, they care about their apps, and they care about what they can get off of streaming media. That's what we do. We're enabling the ability to not only provide free content, work with content creators to launch that content, we are working with brands to put ads into that content, and then we're providing analytics, insights for the brands, the agencies, and the creators of that. How does that work? You go to your TV, you have a smart TV, you plug it into the internet, you download an app, the app opens, and now you have content. And for those of you, the apps that we're on, for example, if you have Roku, you will see an app that we work with. If you have some of the Fubu TV, that's an app we work with to help monetize. So we work with some major apps across the ecosystem along with Samsung TV. And this is just growing. Now, one of the things I failed to mention is 100% we're a US-based company. The reason I had a decision to make. The decision was, do I want to have a highly dilutive investment in the US, or do I want to use the Canadian mechanism of raising capital? And so what I chose to do is use the platform that is the TSX-V to raise enough capital, not a highly dilutive round. And that has been effective for us. And the reason we did that was two reasons. First, the dilution element. Two was the fact that, three reasons. We didn't need that much capital to really energize this company. And number three was we could use stock as a currency to acquire other companies. And that's really what our strategy is about. If you look at cord cutting in the US, there are now more people who do not have cable than they are. There's more people, and we're just in the early stages. That's 2022. That's $28.7 billion. And we're just in the early stages of streaming TV. If you look at viewership, more people are streaming content than are watching cable TV in the US today. This tells you the breakdown. And initially the idea is if you have Netflix, Netflix was the key component of what people were using. But what's happening is people are starting to cut those subscription services as well. Today, Netflix announced the launch of their ad-supported model. We've been doing this since we started, parts of doing this since we started the company, and really accelerated this growth over the last year. Whoops. So where do we serve our ads? Who do we partner with? How do you see what we're doing? We are all these devices. We're on phones, we're on desktops, we're on TV, and we're streaming. And you essentially can see the ads we're creating and the apps we're creating on Roku, Android TV, Samsung Fire, and Apple Plus. So we are in the ecosystem. We're an important part of it, and we're growing at a fast rate. What makes us different is we have a complete tech stack. So Sabio, that's the core business at the bottom. That is where we are working with brands and agencies. The brands we work with are the biggest brands in the US. GM, Ford, McDonald's, Toyota, a host of other ones. And what we're doing for them is helping them identify the right audience and where to reach those consumers in the US on streaming and mobile devices. Then, AppScience is the platform, it's a SaaS platform that allows us to provide them deeper insights and analytics. And finally, Vidillion is a company we acquired on 4/1. Vidillion launches actual apps and integrates with apps to provide them the technology to essentially have ads. So if you're a content creator, Vidillion would be the company you would enter in with a relationship. Vidillion would create an app, they would put ad breaks in, those ad breaks would be handed to Sabio to connect Alexa, GM, Ford, McDonald's, goes to AppScience to provide insights and analytics. That's what we call, that's what we call EMV. Enablement, monetization, validation. We're the only company in the space outside of Roku that has all three components from a technology stack perspective. One of the very few, there's a couple of more that come up now, but no one has the analytics, the enablement, and monetization under one roof. That also allows us to have a deep understanding of consumers. So in the US, we have a 55 million household home print. What that means is we are cross-bridging mobile devices with streaming devices, connecting that data and helping brands and agencies understand it. And an example of that is, let's say you are a QSR, let's say McDonald's, and you want to reach a consumer who has visited a competitor's location. We have the ability through our mobile data to look at the apps that are in the consumer's homes. Maybe they have kids apps, maybe they have mom's apps. So they're obviously in that category. They also visit a Dunkin' Donuts 2 times a week. In addition to that, we also know that they're on these streaming apps and they're watching content that is lifestyle related. We bring all these data points together, create a profile, and help McDonald's reach that consumer on TV, followed up with an ad on their mobile phones. So the cross capability that we have now, Google has this capability through search, and they do it search and then they target it off YouTube. We're doing it off of streaming, mobile, connecting the dots, all from a technology perspective, and it's working. That's why we have major, for a small company, we have some of the biggest brands in the US. I'm going to hand it over to Satya Premji to talk about, or see if he'll talk about some of our business fundamentals and the execution that we continue to do. Satya?
So, as Aziz mentioned, 2021, it was the best year of our company. We were able to grow sales 84% year over year, so over $24 million of sales, while keeping 60% of gross margins. And what's also very impressive about our growth over those years is that we were able to be profitable at the same time. We were able to be profitable in 2020, we were able to be profitable again in 2021. And we put out a press release earlier this year saying that we expect to be even profitable in 2022, and that has not changed. And that growth in 2021 has held over to 2022 as well. If you look at the first quarter, we were able to grow sales 116% year over year. Second quarter, 70% year over year, for a combined rate of the first half of the year of 88%. And Aziz had talked about streaming TV being a big underpin of that growth, and he's exactly correct. So CTV sales in the second quarter grew 106% year over year. For the first half of the year, streaming TV sales grew 158% year over year. And so when Aziz had showed that chart before about where we are in the CTV stage of the cycle, we're about 28 billion sales, worldwide, and you compare that growth over the last year, that's about a 35% growth year over year. We're growing at 158% this year. That means we are taking market share from our competitors as well. And the advertising business in general is seasonal. And so if you look at the first 2 quarters of the year are the slowest quarters of the year. In the last 2 quarters, that's when these really picks up. If you look at 2021, we did 70% of our sales in the last 2 quarters of the year. And to kind of normalize the seasonality from the previous slide, we've conducted a trailing 12-month visual. And that's really how you should view this company, because on a trailing 12-month basis, you will see this continuing trend in our sales going higher and higher quarter by quarter. Where if you look at the second quarter of 2012 months, we grew our sales 96% over the previous second quarter of the prior year. And we are expecting that trend only to continue on as we continue to grow our CTV market. And we're able to do that also while maintaining 60% gross margin. So we're able to accomplish this growth without sacrificing anything on the margin standpoint. And going over to CTV is a composition of our sales mix, CTV being streaming TV. You are also seeing this increasing happen quarter by quarter on a trailing 12-month basis. We're in the last trailing 12-month basis quarter for the quarter ending June 30th, CTV made up 45% of our sales mix. And as Aziz had mentioned, we work with some of the biggest brands and agencies in the world. These are the top brands in the United States: GM, 3M, Wells Fargo, Facebook. The reason why these big brands come back to a small company like ours is because they get the highest ROI on their spend with us. And that's due to the app science analytics that we provide in addition to our DSP and SSP capabilities. And if you look at what's happening in the broader economy and you see the results of Roku, and you see the results of all these other tech names that are suffering big decline, what you're going to see is, when the economy gets tighter, is these brands and agencies are going to pull back on their spending, and they're going to look for where they can get the highest ROI on the ad dollars that they spend. And that's where we are very well positioned. We are not seeing the deterioration in our top line that our peers are seeing. And this comparable chart here, it really paints a really compelling picture in my view. If you look at the trailing 12-month basis, our sales of $30.2 million is above our market capitalization now in US dollars at $27.5 million. And so we are trading under 1x, and that discount is only going to continue if those quarters increase. And so we believe this is a very compelling opportunity, and we're also a profitable company too. So we're not just growing the top line and burning through cash. We are a profitable company as well. So we have a couple of analysts right now that are covering our stock, Beacon and Paradigm Capital. Both have estimates of around $3.12 right now. So as far as the 2022 year, both have estimates of around $35 million in sales. We are very comfortable with those numbers. We see no issues with those numbers. Right now, we also have a very clean cap table. We went public. Aziz, when he was building this company, he took on some high-interest debt, and all of that high-interest debt was cleared out as part of our RTO. It was refinanced at a rate of prime plus 1% with a top bank in the United States. So we have a very clean cap table. We have about 45 million shares outstanding, fully diluted 53.6 million shares outstanding, and what's important to you is that insider ownership owns 65% of our company. So we have a very high interest internally to ensure that our company is a success.
And just to, thanks Sajid. And when we say CTV, we mean connected TV. We don't mean CTV, the Canadian broadcaster, just to be clarified. Sometimes that creates a little bit of confusion. We're in the streaming TV and mobile space, and that's really what we're doing. We're creating the apps, going back to the E&B. Enablement, working with content creators to launch apps, create ad breaks in them that then get monetized through Sabio, and finally, providing deep analytics. Now, one of the other things to think about as relates to our business, Nielsen, which is the golden standard in the US, their panel is 40,000 homes. Our panel is 55 million homes of data flowing through our ecosystem. And so because of that, we're able to understand the nuances of consumer behavior. That is effective. So we got this great company, we're executing at all levels, and we're building this capability that will eventually take a bigger portion of this company as it relates to our SaaS capabilities. So, with that being said, I'll take any questions.
Your revenues are higher than your market cap. Do you have like some sort of conversion or a stock option event happening that's debt or not some debt point? I don't get it.
Yeah, why? We don't need it. So the reason, part of what, and Sajid, you could also talk to this, part of the challenge with our stock, and Matthew and the folks know it, as Sajid pointed out, 65% of the stock is held by insiders. Another big portion is held by institutions. So what's happening is there's not a lot of trading volume happening across that.
What is the float? 3 million?
The float is?
Yeah, it's around 17 million, but we only have about 14,000 shares trading on a daily basis, and that's the average volume right now. So a lot of the holders that we have, they're not looking to sell.
And
right?
what was the size of the raise that you did?
It was, so we did two raises. We did a pre-RTO financing that was where we raised $2.4 million US.
At what price?
So it was converted into common shares. So it was convertible notes that were convertible into common shares at a 25% discount to the RTO price. So our RTO price was $1.75, so it fully converted at $1.31.
And your first financing?
Our first financing was 6.6 million Canadian.
At what price?
At $1.75.
$1.75.
Yeah, that's right. And that was all before that was when the only revenues we showed at that point was $12.2 million the year before. And so, we then delivered 24.2 last year, and we're accelerating. Now, if you look at our first and second quarter of this year, what you'll see two things. First of which is, and we explained this, that we have a seasonal business, right? So the first 2 quarters, you will see heavy investment as we scale up. And something to think about, when I showed 120, 130 people, 60% of all people in the company today, close to 60%, almost half, a little less than half, 60%, half of the company today has been with the company for less than a year. We have scaled up fast, so we put the investments in Q1 and Q2, and what you're going to find overall, and we've said this publicly, now we're going to really kind of harvest, right? Our harvest season is Q3 and Q4. Those are our two biggest quarters. We usually execute at that level, and you can see this historical evidence on that. We'll spend the money in Q1, Q2, continue to build up, and even our as we mentioned on our Q2 call, our operating expenses and caps are now leveling off. We've made the biggest investments in the business early on, and Matthew and Rivemont have been, front row of that, and we've been executing along the way.
Do you have comparable that you can share?
Comparable in terms of the stock?
So public company on yours?
Sure. I think we had the slide on
Yeah,
there.
yeah, so is there-
Yep.
There's one in that handout, yeah.
So the biggest companies we get now, Acuity is the local, obviously Canadian, but they really don't do a whole lot in streaming TV.
Okay.
Our biggest competitor, who we run into the most, is Magnite and Roku. Those two are the true pure play streaming TV players in the space, because we're a US-based company. That's who of all this list, that's who we go up against the most. Trade Desk to a certain extent, but Trade Desk is all things. So we are literally taking market share, increasing, as Sajid mentioned, the CTV OTT market is growing roughly between 25 and 30% globally. We're growing at 100%, over 100% on streaming TV. So we're still obviously we're a small company, but we're growing really fast. As you can see, the trailing 12 months, and that's based off just the first two quarters, which is technically our lightest quarters overall, historically. We don't see any difference this year. You have 30 million trailing 12 months, just based off, what's happened from year to year, based off the last two quarters. So yeah, the question is always, and that's where people are, and that's why Matthew wanted us here, because there's people who are scratching their heads. We don't get it. You've executed, you've done everything you wanted. We said we were going to increase our CTV revenue. We said we were going to hit our annual targets. We said we were going to be even positive. We did all those things and continue to do it.
So I'm just, are you B2B or B2C? Are you selling to the consumer or?
We are selling to the agencies, so we're kind of in that between. So we'll work with the brands.
Aggregating content or anything specifically like that, or?
Sorry, what was the question?
Aggregating content?
No. So what we'll do is we will essentially, Vidillion, for example, goes back to EMB. Let's say Vidillion is involved with apps, right? So they're kind of the technology in some apps. We also have apps that we don't use that are also not Vidillion. So let's say there's an app, and the app could be Fubu. Fubu TV is an app we work with. We essentially have ad spots in Fubu TV. And now what happens is, when we identify the right user for someone like McDonald's, our ad spot, we will put an ad spot in Fubu TV for McDonald's.
Right.
In addition, we will then be able to see, this is why we serve this ad, and here's some of their insights on that consumer. That's really our core business, the ability to kind of connect the dots between consumers, like who's watching the streaming apps,
Targeting audience.
and the brands, exactly. And what is unique about what we're doing and how we're approaching the market is that app science capability. App science, as I mentioned, is based off of mobile IDs. So whereas Nielsen is focused in on panels, we're actually seeing mobile IDs flow in, and those mobile IDs have all kinds of great, rich information. Apps you use, location, visitation. All of those things combined with our viewing data from streaming allows us to have a richer set of insights and targeting abilities to reach consumers.